Hello everyone, welcome to another video. Well, in this video, we're going to be looking at one of the ways I use to nail intra-session highs and lows. Okay, intra-session. Now, earlier on, you learned the deviations, I believe, right? And we're going to follow the same structure by looking at what you will learn, why you will need it, when you will use this, and how you will use this. And then we'll go on to looking at some chart examples. Okay. So what will you actually learn? So in order to learn how to nail the intersection highs and lows, number one, you're gonna learn how to not get faked out. Okay, you're not gonna get faked out. So no fake outs. Right? Sometimes yes. Okay, you can't expect perfection, but sometimes you can get faked out. Okay, I'll also understand how to know whether a high or low is actually being formed. Now, we're gonna look at closing prices, okay? And we're also gonna look at liquidity pools. Okay, we're also gonna be looking at liquidity pools. Specifically, I'm gonna take you into one of my concepts that I reserved for my one-on-one students, known as the liquidity sequentials. When I'm gonna go in depth, like how I do it in the one-on-ones, but I'll show you enough so that you can do something with it. Okay. And for the guys that are saying, no, this is nothing new under the sun, well, I created it. Other people are copying what I created. All right. So, or maybe you can't really say that. Maybe other people also came to the same discovery, but for the most part, a lot of people are copying me. And if you did come to the same conclusion, then good on you. But I was the first one to ever do it. All right. But trust me, liquidity sequentials, no one does it. No one knows it. No one. No one. All right. So let's take a look at why you need this. So number one, you're going to increase your win rate for sure. Okay, you're going to increase your win rate, and you're going to have your own confidence in your own analysis for picking tops and bottoms. Now, you can say that picking tops and bottoms is a pain in the ass, and it's something that should not be advised to do. But if you can do it, then why not, right? Okay, so we will be focusing mostly on what's known as an external range demarker. That's ICTs. So when it's not mine, I'll tell you it's not mine. It's ICTs, external range demarker. And we'll also be looking at closing prices, as I said. Yeah. And we'll also be looking at liquidity sequentials, just like that. Okay. When will we use this? Now, of course, you're going to be using this inside of each trading session. And these are the times that I use for a trading session. 6 to 12:30 is Asia. 1 to 6 is London. 7:30 to 12 is New York session. And 1 to 4:30 is the PM session. That's all. Yep. Now, how will you use this? Number one, you're going to be back testing this information between the 1 hour and the 5 15-minute charts. You're going to be observing in real time how the session highs and lows form. You're going to be projecting the daily limit to know the opposite extremes of price. Okay, because when price has reached its extreme only and only will it begin to exhibit signs of reversals. And you're also going to be studying the examples that I'm about to show you. And again, you're going to use SMT divergence to confirm the high or low that is being formed in front of you. So you're going to learn everything, all that theory, right? And then you're gonna apply this by applying SMT divergence to know whether this is indeed a high or low, whether this is indeed a point in which price can actually reverse from. Okay, and a small note for more in-depth videos. Yeah, you can find these in-depth videos in the video post. Only once enough of you have joined. The link is down in the description below. It's the walk video course. Okay, and if you are interested in my other concepts, the extended concepts that deal with advanced precision, market profiling, and bias prediction, you can definitely find it in my one-on-one program. Okay, as it is today was the day. Today is Friday, 24th of May. Yesterday I made 30% on my Alpha Capital account. I just got a small account and I don't recommend using them because the support is shit and a lot of things are shit about that company. Are they only paying out the people that promote them and their affiliates? So I bought a 10K account and I made 20%, 15% initially. I got my payout 2 weeks later, and I just made 30% yesterday, totally. And I don't know if I'm going to get it today. I don't know if I'm going to even get it next week, but let's see. Right. So, anyways, the point is, I use all my concepts to make 30% on an Alpha Capital account. If you want proof, send me a message. I'll send it to you. All right. So, with that said, let's take a look at the charts on how you can use this. Because I did not tell you the how. I showed you what you're going to use, right? So now let's take a look at the how by looking at the candles on the charts. Okay. So I hope you all can see the charts. All right. Now, first of all, we're going to be looking at the 1 hour chart. Okay. Now on the 1 hour chart, what can you notice? What do you notice about each and every high and low that is formed? Can you see each and every except the extremes, because those are probably on the H4. Look at these extreme points. Can you see the way they're forming? Like a doji type of shit. Type of shit. Something like that, right? So these are external range D markers. Okay, these are external range D markers. Now, an external range D markers, right? They occur when the wick of the candle. So when the wick of the candle is greater than the body of the candle. You know, there are some instances in which they are almost the same, but I consider equal wick and equal body to be the same. Okay, so what's this? There is no. Let's take a look at this wick here. So let's calculate. This is 447. 447. This is, my goodness, 603. Okay, and that brings me to the second point. The second point is you want price to make that wick, right? And you want it to close back below these previous candles. Ideally, you want it to close below the candle that it stopped hunting. Okay, you can see this is happening on every single thing. See, stop hunt, close back inside. Stop hunt, close back inside. Okay, stop hunt, close back inside. Now, you can argue and say that, okay, Sean, in some of these instances, we close back inside, but we are missing a significant chunk of that range, right? Okay, that is when we are thinking about going to the lower time frame, 5 minute, 15 minute. Okay, but here's the thing. Here's why I didn't tell you. Now, whenever we are looking to catch the higher low, right? Think of this. We are interested in looking at price within the lens of the magic hours. What is the magic hour? You can find out in the video course. But for the purposes of showing you an example, it is the midpoint of the London session and the midpoint of the New York session. Okay, so if we are coming here, let's take a look at this example. Let's take here. Okay, now this is 5 a.m. Eastern Standard Time. Okay, see how we took a low right there. But when it's taking this low, how do I ensure that I actually get in the low over here? Right, that's the biggest problem. So let's check and see, is there SMT divergence? This low, 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 higher low. So there is an SMT divergence. So when price closes back inside, you know that, okay, you know what? This is indeed going my way. But the main crux of the issue is I want to get it inside here. So let's go to the 15. Can I do anything? Since one fat candle and price goes up, right? Go to the 5. Can I do anything now? What do you know about structure? Well, we understand that this high made this low. So I would require price to come all the way down here. Yeah, I want to see price come down here. Okay. At the same time, you all know the high risk to reward filter point. That's right there. Can I refine this with the higher time frame, or either can I take it from the higher time frame and move it down to the lower time frame? Sure. On the 15-minute chart, it doesn't exist. So on the 5-minute chart, that's the best that we got. So we want to see price come back into it. There. Okay. And now you understood that, okay, I have SMT divergence. I know that this is the session low. This is the London low now. Because we took out a 1 hour low, we have SMT divergence, and we're breaking higher. Okay. So by number one, you understand that you're not going to get faked out anymore. And number two, by using the high RR filter point, you can prevent buying here, buying here, buying here. You can buy over here. Okay, you can buy right there. So let's check it out. Oh, what happened? Stop loss hit. Why is that? Look at the time. Yes, we found the low. But once you start a new session, game over. Okay, once you start a new session, game over. Oh, so you see, why am I showing you this? Why am I showing you this? Because it's vital to understand the higher time frame. See, we got there, we went up, right? But it didn't provide us an entry. At the same time, we went here, stop 100, close back inside, come back to the 15, same scenario. So if you can find two time frames that exhibit the same symptoms, you have a perfect setup. Okay, so in this case, the H1 and the M15, or the H1 and the M5. Okay, so in this case, we saw that for this here, this initial buy, it only showed us a rejection on the 1 hour, not on the 15-minute, not on the 5-minute. Whereas on the H1, we saw that there was a rejection here. M15, we saw the rejection here. So what can we do next? Price breaks down, uses a gap, and it starts selling off. You can enter somewhere there. How do I know this? Because if we see that the 15-minute chart also has the same rejection, all you have to do is check for SMT, right? Let's see. Higher high, lower high, higher high. There is SMT divergence. There is, right? So I see that, and I see that, okay, you know what? The 1 hour chart is rejecting. 15-minute chart is rejecting. We're closing back inside. So I can simply go to the 5-minute, right? I can go to the 5-minute, and I use whatever entry model that you know. Okay, like if you were to use one of mine, okay, you would know that you can use this gap here. That's a model number 3 entry. Okay. Or if you want to use something from ICT, yeah, if you want to use something from ICT, then what can you use? Then in this case, what is going to be the setup? Right? Question is, what is going to be the setup? It's a normal fair value gap setup. Okay. If I take you to the 1-minute chart on the same spot right here, okay. Oh, what is the setup? I'll tell you what the setup is. Can you see that we have a stop hunt and price went ahead above this, right? So it went right above this candle. That's an order block. Now, this order block was used up, right? And when the order block fails, this very order block, my friends, is now your breaker. There. That's your breaker. So by understanding stuff like this, if you understand ICT's PD array matrix, it is not gap high low, gap high low, no. ICT's PD array matrix is all about failed POIs. Failed POIs. What was used before is now going to be used again. Okay. Open your eyes. What was used before is now going to be used again. Okay. Now let me take you through another example. Let's see. Let's take a high or let's take a low, whatever forms. Okay. So we're getting to the end of the day. This was, I believe, yesterday's price. Yeah, yesterday's price. So yesterday we took part in these cells here. Okay. See how we're rejecting. See that, right? We're rejecting. Go to the 15-minute chart. What's happening? High selling. We have news at 10 o'clock or 9:30, if I'm not mistaken. So we wait. Okay. See that? See that rejection? Check if that rejection is there on the 1 hour. Oh my goodness. Yes, it is. You can see it's visibly rejecting. Right. You can see the wick forming. So you go to the 15. There. See the same thing. Jump down to the 5-minute. And now see if you can apply anything ICT related. Yeah. This is just, I'm saying it to you. Not that I use it. Okay. Saying it to you. So for you, if you are, of course, a lot of you are not my students, so you won't know my stuff. If you look at the 1-minute chart, let's see. What can we use? These are shorts I got in. The buyer's prediction also said that they're going to sell off. So simple. Apply all these together, you have a close to 100% win rate. Right? So check it out. Let's see. We have a stop hunt here. That becomes a rejection block, right? So this rejection block gets used over there. Okay, that rejection block is used over there. Doesn't change the fact that it's a rejection block. Okay, so this is your breaker. Why? Because rejection block is part of the order block theory. This is your breaker over there. There we go. There we go. That's the point in which you're interested in selling. Right, that's the point in which you're interested in selling. Goes up there and closes above. Now what are you going to do? Now let's say you are now let's say you're short over here, right? Price goes up. And here that's a volume imbalance. So what's going to happen to my setup? Because my original setup is now going to look like this. I'm in deep drawdown. This is say we're here for 2 hours. Now I'm in deep drawdown. Correct? I'm in deep drawdown. So then what? Yeah. So then what? Then what are we gonna do? What we're gonna do is you're gonna chill. You're gonna chill. You're gonna trust this because you understand that a high has formed, right? Now you're gonna chill. You're gonna look to enter again. Okay. See that? See that? Right? How am I going to enter this? How am I going to use this? The breaker use the same thing. There. From there, you're going to sell. Okay, from there, you're going to sell. Now, on the 1-minute chart, this is all you see. Let's say you want to check out a more precise entry on the 30-second chart. So on the 30-second chart, right, what we can see is we have a stop hunt right there. Price goes higher, uses this rejection block again. Yeah. And when price trades through it, you see the reaction there. When price trades through it, this here becomes your breaker. Okay, that becomes your breaker. But we are now validating larger structure. Okay, look at this. We are validating larger structure. Stop hunt, order block gets violated. This becomes a breaker. Watch your price tap into that. What happens? Doesn't tap. Why? Because now it's validating even more structure. It's validating even more structure. So if you look at the 5-minute chart, that's why closing prices are very important. Okay. Now on the 5-minute chart, you can see that, okay, I have order block used up here reaction. So price is going to retrace into that for a what? For my setup. There you go. See that? Retrace into the breaker. Let's go and look for a confirmation entry. And again, remember, I just said we are looking at nailing intersection highs and lows. So this whatever's happening right now on the 1-hour chart, we're done. We already solved that. We already solved that problem. If you look at the 15-minute chart, rejections happen. We solved that problem also. 5-minute chart. Here we're forming a new high. See, take out a high, close back inside with a massive wick. Now I want to see order flow. right? I want to see order flow. I want to see SMT divergence. Do I have any SMT divergence telling me that, okay, Sean, this is a high. This is a high that we're interested in forming, right? See this higher high on Dixie, which is actually a lower low because I inverted the charts. Lower high on silver, lower high on gold. So I have a selling opportunity. This is a high. Go to the 1 minute chart. This is another setup I took yesterday. Apart from this, I took one right here at this retracement. So now, in this case, how? How am I gonna work with this? Well, order block wise, I have nothing. Nothing at all. Right. Go to the 30-second chart. On the 30-second chart, what do I have now? Huh? What do I have now? On the 30-second chart, I have that's a stop hunt. This candle there, this down close all the way to this wick, that becomes your breaker only and only if price reacted from this down close candle, which it did right there. See that? That reaction is enough to call this a failed bullish order block. So there, I would focus on that candle to this candle, and I would want to go short here. Right, so I want to go short right here. Ideally, I want to pair this with a high risk reward filter point. So that would be this. So as it gets close to it, I'm just going to short because sometimes different brokers, different feeds, and SMT also. So I would enter somewhere here, stop loss above this high, and keep it simple for now. There we go. Okay, there we go. So it is as simple as that. So this is how you catch highs and lows intra-session using my concepts, using ICT concepts as well, right? So let's take a look at what you're seeing right now, the gold buy. So number one, here are the stats, right? For today, the gold bias is bullish for the London session. Okay, the gold bias is bullish for the London session. Now, if I look at SMT divergence, you can clearly see there is an SMT divergence, right? Higher high, higher low, lower low, higher low. Okay, so how do I understand that a low has formed and my buy is correct? Right. Look at the 1 hour chart first and see, has a low been formed? Right. Has a low been formed? Well, I can see the Asian low has formed nicely. You see that? And its price is going up. And now a low is being formed. See that? London started off by trending higher. And now a low has been formed, as you can see. So I can jump to the 15-minute, check for the same setup. Is it been rejecting? Yes. 5-minute chart. Perfect. So now, if I want to use, let's say, ICT's concept. Okay, let's say I want to enter again, which I won't because I'm sticking to one trade. How am I gonna do this? Well, like I said, ICT's concepts are all based on failed PD rates, right? So right now, if I just look to the left here, can you see how this very small stop hunt right there, we went up, making this a bearish order block. Price reacted and it failed. Therefore, this up close candle, the series of up close candles, but I'd rather use this, that is your bullish breaker here. You see that? That's your bullish breaker. So, Sean, why can't you keep your stop loss here? Huh? Why can't you do that? Well, now I can. I'm going to keep it a bit at a safer distance. Okay. And what do I do if I want to take another entry? What do I want to do if I want to take another entry? Right now, I have nothing that I can do. Right? Look at the 30-second chart. 30-second chart, can you see how stop hunt gave us a rejection block? Right? Give us a rejection block. 15-second chart, is there an order block also? Yes. So order block, price reacted, went higher, breaker. There's another entry. There's another entry over here. Right? then you can use the same thing for fair value gaps, right? You can inverse a fair value gap only and only if we get a reaction from it. But I'll save these things for another video so that you guys can look at the separate videos and glean the information accordingly. Okay, so I'm just gonna move this back because I want to stick to my original risk parameters. And now let's move on to the next topic. The next topic in this will be to determine what your session limits are or what your daily limits are, right? So if you take yesterday into consideration, right? Yesterday I made my 30% on Alpha Capital 10K account by understanding what the daily limits are, what the daily limit is for, in this case, gold, right? But the only problem was I could not hold for the entire range because Alpha Capital has this rule. And that rule is if you close your trade 2 minutes within news release, it's a problem. So I closed it exactly on the third minute, somewhere around here. Okay. And I missed all this where I could have made like 60%, but that's okay. I knew the range, the daily range. Okay. If the Asian session forms the high of the day, right? You're going to take that structure, this entire structure from the PM session up to the Asian high because price closed below it. Look at the 30-minute chart. Let's show you. See that? Close below. Take that range. Okay. This would be where you would be taking profits, like a 2 standard deviation of my N30 projections. This third standard deviation right here, that is your potential low of the day, where price can turn from there. And if it goes even lower than that, then it will definitely turn at the fifth standard deviation, right there. And that projected the low of the day. Okay, that gave you the low of the day. All right. Now remember, the structure points that you're referencing, they must be used. Now, this what you're seeing here is a model number 3. That's why we can use it. Okay. Now, if you take today's price action here, how do I get today's high of the day? Right. How do I get today's high of the day? On the 30-minute chart, this structure was not used. Okay. On the 15-minute chart, what was the structure that was actually used up? Okay. On the 15-minute chart, what was the structure that was actually used up? Well, it was this small section over here. Now, I can't teach you the rest about this, the remaining parts about this concept because it's in my one-on-one only and the video course. So this is the structure you're going to use to determine the high of the day. Okay, I am going to be taking this high to this low, like so. Okay, 3 standard deviations will be the potential high of the day. 5 standard deviations will be the actual high of the day. Now, isn't this too small? Sean, are you not telling us something? Of course, there's something I'm not telling you. Something I'm not telling you. Okay. The structure should belong to the Asian session. So this is wrong. Okay. At most, this is going to give us the New York high. Right. So, Sean, then what do I use? Come on, man. Give us the truth. Give us the source. All right. Here's what. Okay. I'm gonna take the Asian low around here. Okay, around here. And you are going to go to the 1-minute chart because we want to see clear structure that has been closed through. Right? Do we have any closing business here and mitigation business here? No. Anything over here? Closing and mitigation business? No. So go to the 3-minute chart. On the 3-minute chart, do I have any closing business here? No. So then what? Then see how we have a bullish order block. See the bullish order block here. Mitigation, right? Mitigation. Now go to the 15. Yeah. See how this gap was mitigated by a very small margin right there. Okay, I'm taking this high in the Asian session to this low. All right, that's your potential high of the day. Okay, that's your potential high of the day, right? From there, and then price will, sometimes price could just spike just a bit more because of the liquidity that's resting up over here, and then it'll come back down. Okay, now if you want to see the weekly range, right? Check Monday's price action up over here. Okay, I'll show it to you. And what you'll do is you'll go to the 1 hour chart. And on the 1 hour chart, you're gonna find structure that was used up, that was basically used, right? You can see that there is a lot. Okay, you can take this low, you can take this low, and you can do this, right? You can do right, something like this. Okay, but price, you can see right there, it kept on going lower, 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 lower. Okay, okay. So what then? Because this range is way too small. And if you go to the 4 hour chart, right? If you go to the 4 hour chart, the only range that you can even consider using, right, is non-existent. Why? Because we have zero body closures anyway until here. Okay. Then you go back to the 1 hour chart. And if there is nothing that you can properly use, okay, there's nothing else that you can properly use, you are sticking to this 5 standard deviations. Because now what it's telling you is that, okay, if we have gone through that level, right? If we have gone through that level, then low of the week has been set. Low of the week is going to be set soon. There. Okay. Worst possible situation, and this rarely happens, rarely happens, right? Is price will do something. Price will go for 8 standard deviations. Okay. Give me one moment. Okay, sorry about that. What was I saying? Yeah. So if price goes past the 5 standard deviations, right? if it goes past 5 standard deviations, then worst possible situation is that it will try to reach for 8 standard deviations. Worst possible situation, it will never do that. Worst possible situation is 8 standard deviations. Okay, but every single time it will stop at 5. Like how it stopped at 5 here. Okay, you can see a lot of examples here. See, last week we had this project in the high of the week right there, and this project in low of the week right here. So we went a bit more, dug deeper, and then we're going to go higher. Okay, so if you guys have any questions regarding this, please feel free to comment it down in the comment section below, or let me know in my DMs. Okay, for those that want my video course, if you want it to be affordable, the WAP link is down in the description below. If you want one-on-ones, where I'll literally take you through everything via personalized experience and a personalized approach, okay, send me a message and we can work something out. With that said, I hope you had a good one. Good luck and good trading. Bye-bye.